My voice is quite loud, so I think it shouldn't be a problem. Well, David told us this morning that we all have to be mathematicians in today's and future marketing. Happy for me, holding a PhD in computing and mathematics, but not very familiar with the topic of marketing. I'm trying to tell you something about the Ideal brand in the Netherlands. For those of you unfamiliar with the brand, it's a online banking e-payment method, as we call it. It's a payment method which connects directly to your online banking or mobile banking environment. For those of you from the UK, you can compare it with the upcoming payment method Zap, which also directs or connects directly to your mobile banking app. I'll present a few slides on the brand itself, some figures, why we think it became successful, and what will happen in the future and what we have to be aware of and have to adapt to as a payment method. We currently are a payment method existing for about 9 years. We did 143 million transactions last year, which last year, with a growth of about 20 to 25% of each year. We expect to do that this year as well. Saw the figures for last month, which were even higher, growth figures that is. And more than 20% of all those transactions go through the mobile channel already. So Ideal is available in the mobile channel, which allows for all sorts of new use cases, from e-commerce over to m-commerce, and makes it possible for you to pay with Ideal in physical situations, just right outside, pay for some subscription or whatever you like. As a brand, we have a quite high brand awareness in the Netherlands, that is. 96%, it's mostly or almost unbelievable. And in 2 brand researches, we came up quite high as well. It ended on the 5th place last year for the most indispensable brands, and on the 3rd place for the strongest brands in the Netherlands. We only have to leave IKEA and Google above us. And although maybe a very small brand, it turned out that way. It's quite a strong brand in the Netherlands. In the payment system, we have about 11 banks participating. That is banks on both issuing and acquiring side. That is the retail side and the merchant side. As you might be aware of, payments is a two-sided market. There are always 2 markets in the payment chain. Those on the retail side, consumers have to be able to use the payment method, and merchants have to sign a contract with a bank to accept the payment. And these are 2 separate markets, although connected through the payment platform. We have 46 payments institutions. Those are financial institutions, though not traditional banks, but they are licensed by the central bank, and they are licensed by the brand to connect merchants or other acceptance for the Ideal brand. And when it comes to merchants or websites where you can pay with Ideal, we are currently counting up to 100,000 websites where you can pay with Ideal. And well, it's not on this slide, but in over 50 countries there are websites where you can pay with Ideal. So it's for the moment only Dutch customers who can pay with Ideal, but you can pay with it in over 50 countries on several websites. Where do we come from? What do we think that is the, well, I wouldn't say the secret behind this success, but the basis of this success. And it's the model that we are strong belief in competition, as we call it in the Netherlands. Payments being, as I said, a two-sided market. You have to find a way to let both markets grow. Otherwise, only merchants would accept the brand and nobody can pay with it, or the other way around. And we think competition is a way to achieve that. And competition is is formed of the two words cooperation and competition. And you need cooperation to create a biggest pie as possible, as we say it. And then you need competition to share the pie most efficiently. And that's basically it. What are in payments cooperation and competition about? Cooperation is about technical standards, agreements, schemes with a brand like Ideal or MasterCard or Visa. And competition is about foremost pricing, but also about value-added service or special niche propositions for typical use cases or merchants. And if you find a balance between those two, then at least in the Netherlands we learned with different payment brands, not only Ideal, but also the former debit card brands, that you can become successful as a payment method. Where do we think this is all going? I made a slide which is a result from a research program called Shopping 2020 by the distance selling organization in the Netherlands, thuiswinkel.org. Maybe the Dutch audience participated in this program, quite a large research program by the eCommerce organization. And they came up with a slide or a model of
which part of the Netherlands is that?
up in the north, very far away from here. Yeah. You can't. There's no place in the Netherlands where you can look that far. It's and the thank you, Dave. The model made a breakdown of the e-commerce chain, and then from that the transaction part, it broke down into two pieces where we see the basket, checkout, filling in delivery details, payment, and then the delivery itself with all aftercare or services. And we think, and the result of this research was that the aspects or the parts of the process, checkout, delivery details, and payment, we have to find a way to unite those three actions into one or into one process with the goal to make the payment seamless. Currently, you have to identify yourself 2 or 3 times in a checkout process, make yourself known to the web merchant, make yourself known to the logistics provider, make yourself known to the payment provider. I think there were figures from bol.com. They said every second the checkout process takes longer, you will lose, I don't know the figures, but about 10% of conversion. So it's the easier the checkout process is, the higher the conversion will be. Well, the idea is here, and we have to we will work this out in the second phase or the second step of this research program, which kicks off I must say tomorrow, and we will research further on this to see what seamless payments then will look like. And one thing we know for sure is that where we're currently focusing on the checkout as a checkout process, it will be a way of check-in and then being known in the process, and then the payment can be more seamless, can go to a one-click payment like process. Well, I'll leave it with that. What shall we do? It's yep, David.
Why don't we go ahead and introduce our panelists?
Yeah.
And then why don't we kick off with a few questions, provide some expertise in terms of your own backgrounds, and then let's dive into the subject at hand.
Yeah.
And I think that the three of you
Leave
got
that
some
slide
good
up.
ideas to which you would like to speak about. And then what I'll do is, if there are other questions from the audience, I'll work my way around and continue to feed the conversation.
Okay.
Sure. Okay. All right. I'm Dave Birch from Consult Hyperion. I'm here because I complain about British Airways all the time on Twitter, which is the... so I can assure the Dutch audience that British Airways do not respond within 1 hour, 24/7, and in 10 different languages. And as I have the good fortune to be an elite flyer, I can also tell you they don't answer the phone after 8 o'clock, even if you're elite. So we've got some way to go on this, I think. I'm switching to KLM. They convinced me. That was a very good pitch from KLM. So, in fact, on Twitter, I just 5 minutes ago just posted on Twitter because I just tried to check in for my British Airways flight back this afternoon, and the system is down. So I just took a screenshot and put that on Twitter. So you think I'm joking? I'm not. Go on Twitter right now. It's me complaining about British Airways, 24/7 in 10 different languages. So I know all about social media, basically. That's why I'm here. So I was asked to explain to a non-payments audience technology, infrastructure, and interoperability. I can do that very, very quickly. Technology is easy because we all know you don't have to be a genius to know the mobile phone is going to dominate. For most of our clients, trying to work out convergence strategies around mobile has become the critical factor because you say seamless. In fact, the payments are vanishing inside the apps. So when I use my McDonald's app or my Tesco app or whatever, there is no payment. The payment's gone. It's disappeared inside the app. If I buy McDonald's using my McDonald's app, I couldn't even tell you whether I used Visa or MasterCard or whether I don't even remember what. So the payments are already vanishing inside the apps. Infrastructure, I think you have a more complex problem. In Europe, the infrastructure is about to change significantly. The European Commission has a consultation right now, which they call XS2A, which is about regulated third-party access to bank accounts. And I don't think many people understand the significance of that consultation. The payments are vanishing into the apps, but fairly soon the apps will have mandatory access to bank accounts. So that means that if I use my app to buy something in the shop or to go to British Airways, the app can just go straight to my bank account to instruct transfers and take money and so on. So on the infrastructural level, Europe is about to see some very big changes, which I think are very interesting and quite exciting, because that will make payments a lot easier in a great many different ways. Obviously, it means the incumbents have to make some big investments in APIs, which is very good news for Apogee, who have excellent candy on their stand. I don't judge every stand out there by the candy, but Apogee is excellent, and that means their APIs are very good as well, I'm sure. And the final point is interoperability. We used to think that finding ways to have interoperability was really important, but I'm not so sure about that anymore. I'm not sure that's true anymore, because when I walk into Schiphol and my British Airways application opens automatically, I do everything through my British app, the fact that that doesn't work somewhere else doesn't matter. The fact that I walk into McDonald's and because of Bluetooth, my McDonald's app opens and it registers me and I buy things the fact that app doesn't work in Burger King doesn't matter. You know, in your pocket, none of us want a situation where we have 1,000 different payment cards and 1,000 different loyalty cards. That makes no sense in the physical world, but in the mobile phone, it doesn't matter. You know, the average person in the UK, I don't know the figures for the Netherlands, the average person for the UK, round about 80% of their disposable discretionary income goes to about 5 stores. You know, on my phone, if I have a Waitrose app, a Co-op app, a Shell app, you know, that's basically it. That's most of my spending. So the idea that we have to have interoperability and one system that works everywhere, I don't believe that anymore. We'll all have hundreds of apps on our phones, and it doesn't matter. Because when you walk into the store, the app will just open automatically and take care of things. So technology, mobile, infrastructure, about to change. Interoperability, not sure it matters anymore. Thanks.
Thank you, David. So, good morning, everyone. My name is Christoph Zenneker with MasterCard Worldwide. I'm based in Belgium. Basically, my role is I look after emerging payment technologies for the Western European division in MasterCard. It's a very exciting moment, actually, for us. We're actually, of course, I'm actually echoing a lot of the points that Davey's making here. We're in the middle of a massive transition to digital. And of course, as a payment scheme, we're looking at how do we actually look at the world beyond plastic. You know, plastic will come to an end one day. Everything is becoming digital, and how do we actually facilitate this transition is what I'm looking after in MasterCard. So there are a number of exciting product evolutions that we are in the middle of bringing to the markets, in particular in the Netherlands as well as part of that transition. Basically, the background is that, as you know, everything is becoming connected to the internet these days. Absolutely everything. Washing machines, thermostats, everything. And every one of these internet-connected devices is going to become a shopping device. So, for example, in the US, we've been speaking to this, I think it's probably the world's #1 appliance manufacturer. And what these guys are thinking is, well, connecting their washing machines and because to the internet, and of course, trying to see how people actually use this internet connection to pay by the load. In fact, more and more people actually are buying appliances and thinking, why don't I just lease this appliance from this major brand instead of buying it? Because if it breaks down, you know, that's fine. I'll get a new one, or I get it repaired, or I get a new one after 2 years, etc. So more and more people are leasing these appliances, and what they're thinking actually is, why don't we just charge our customers by the loads, you know? And that's kind of the revolution that we're seeing happening around us these days. So with things becoming connected to the internet, what we need to think of is how will consumers be able to shop more easily in the future? How do we take the pain out of these payment transactions? And echoing what Dave is saying, you know, the payment part will basically disappear, you know. And how do we stay relevant there? How do we make it easier for consumers to shop online? How do we make merchants grow their business even better? And that's really an exciting moment, I think. So what I'm in particular involved in at the moment is this new solution that will really revolutionize payments in the future. It's called MasterPass. So MasterPass, if you want, is the future of payments for MasterCard. It's a digital wallet, basically, that will bridge the physical world to the digital world, so the online world and the physical world. So people don't want another wallet. They want more seamless shopping experiences, right? And it's all about taking the pain out of the shopping experience by, you know, clicking. For example, you're on a merchant site. It's a one-click checkout button. You authenticate yourself, and you're basically done. You can actually even pair your wallet with the merchant application, so that the next time you shop and you've done the pairing, the next time you click on MasterPass, basically, the payment information is sent to the retailer, and you're done, basically. So,
Christoph, we have a few of your slides available. Would it be helpful to illustrate that with some of the visuals that you have up on the screen?
oh, absolutely. Sure. I didn't know you had it loaded on the.
Max can get you the clicker if you would like to just kind of advance to a few.
Okay, so this is all about, the point I was making about the growth of internet. As you can see, today we have already about, as of 2014, 8 billion devices connected to the internet. And look at the next 6 years, by 2020, I think will be about 18 billion. So there's a huge growth of things connected to the internet. In particular, new things, you know, the Internet of Things, right? Your shoes connected to the internet, your thermostat, everything is becoming connected to the internet. And again, we see that every one of these devices are becoming shopping devices. And it's all about convergence once again. You know, people don't want a particular method of payment when they're in a store and when they're shopping over the internet using something else. It's all about using the same tool wherever they are. This is about also geolocalization and targeted offers, basically, and there's a huge potential using these new technologies. The fact that, the consumer expectations and behaviors are already changing. Some of you have probably already heard about these new shopping malls. This is Tesco in Korea. So basically, the gentleman that you see here on the picture is just scanning his goods on a virtual shopping mall and getting them delivered at his doorstep at home. By the time he gets there, the merchandise will be waiting for him. So this is just happening already around us today. Of course, the point that Dave made about mobile payments becoming the future, yeah, by 2020, most of the people will be using their mobile phones and no longer plastic to pay for goods and services. That's just the reality of the world we're going into. And it's all about convergence, so having one single method of payment across different channels. That's just the reality. So what I was trying to illustrate is that what we're busy with is really trying to make things easier, taking the pain out of the shopping experiences. This is some of the things that we're focused on. The tap and go, you know that in Australia, for example, Coles is a big retailer, and 60% of the transactions of that retailer, of the MasterCard transactions at that retailer are already done by contactless payments. So, okay, it's still plastic, but it's just an example of how you can make the person's shopping experience easier. You don't have to wait in line. You just, I mean, even if you're in line, you know, the line gets shorter because the tapping takes a lot of the, you know, the waiting time out of the queue. And then instead of just standing in line, why don't you just shop in aisle? So more and more people will be using the wallets, the fact that they have an internet connection from their mobile phones to pay in aisle. So this is also coming. In-app, this is also something that we are bringing to the market now through MasterPass. And again, through any connected devices, there are more and more wearables. I'm sure you've heard about these wearable devices. Of course, the Google Glass is one example, probably exclusive, but of course the watches, etc., the wristbands. So all of those are becoming shopping devices. And so for us, what's really putting all this together is MasterPass in the middle. This is the solution basically that will work across different devices. It's not a matter of about one particular device, it's about all the devices. And it's not a debate about where the credentials are sitting. Are the consumer credentials sitting in the cloud? Are they sitting in a secure element, in fact, in the phone? You know, it's about how they can work better together, in fact. It doesn't matter, it's not one or the other, it's both. And it's about all the channels that you can use these credentials at. So, and about security as well, it's very important to have very good levels of security in the system. And where we're moving into as well is about tokenization. So basically, as a consumer, think about your payment card, and your payment card will be tokenized. And every device will carry a token, and we'll be able to map that token back to the financial PAN of the bank, so that the security becomes greater in the system. If you lose your device, you know, you can still continue to use your plastic card, or you can still continue to use your, you know, your laptop if you lose your mobile phone. So it's about using these tokens instead of using your PAN number. So the PAN number is a 16-digit number that you have on your card. So these are the things that we're busy with. And as I said, you know, MasterPass is really the key element of that, the way we look at the future. So, thanks. Michiel?
Good morning, everybody. My name is Michiel Helmer. I'm a senior product manager on Rabobank for mainly e-commerce payments. I have done things like, for example, Ideal was one of the starting people in the interbanking Ideal project. We have products like micro payments, we have cash register payments, we have all kinds of other things in e-commerce, but the latest project I'm working on is mobile payments in the Netherlands. We had a small pilot last year in the Netherlands. Was very successful. We did that in cooperation with, for example, MasterCard, the three banks, ABN AMRO, ING, and Rabobank, KPN as a SIM provider, and the city of Leiden, and two of the terminal providers, Atos, Worldline, and CSV. It was a very successful pilot. Our customers loved the product, but in the end, I think in January, the pilot stopped. The cooperation stopped, and then every bank is going for themselves. And unfortunately, Rabobank is the only bank that is really going for mobile. We believe in mobile, not particularly in mobile payments, but more the value-added services that are behind or maybe in front of the payment. But the other two banks, they really issue at the moment contactless cards. But a contactless card, in my opinion, is just a debit card with that you don't have to stick in the terminal, but you can swipe it. I think the real asset is in the screen of the phone and the processing capacity of the phone and the value-added services you can offer on the phone. But in the end, I think it's not a panel anymore. It's more some kind of presentations. Let's do some questions, Max.
I'll kick off. Let me kick off the questions. And, go ahead, Max.
Yeah, I think, especially with this audience, I think for me one question would be, what about the brands, the known brands, your payment brands? As you said, David, the payments is vanishing into the app. Using your McDonald's app, you don't know whether you're using MasterCard or Visa. This must scare a lot of the marketeers here, who are building those payment brands. So I would be interested to know, especially from MasterCard and Rabobank, because it's how do they look at this future where they might become, well, maybe even invisible?
Yes, I think our marketeers are already scared that Ideal is the brand on top of the financial market. It's not our own brand. I think we are somewhere around place 40 or something like that, and Ideal is on place 3. Yes, that is scaring our marketing people, and they are thinking about regaining the people to our own brand, to Rabobank, and see what's happening on that.
Okay.
I mean, it may be that in that kind of retail space, banks have no future as brands. I mean, it's possible. I'm not saying it just to annoy Rabobank, but it is possible that in that kind of space, it's possible that in that kind of space, the bank will become really more of a utility provider. And I know one of the nightmare scenarios is that the bank becomes a utility provider and it's Facebook, Apple, Google who actually provide the user services. I'm sure the banks are going to take action to make sure that that doesn't happen. But we do have to face the fact. I mean, payments, I love payments, but most people don't. Payments are kind of boring. You don't get the girls by being in payments, I can tell you this. So actually, to most customers, if the payments just vanish, it doesn't matter to most customers. So I think the brand challenge there is real. The bank will have to become a brand that's associated with something else, which is critical to transactions. And I suspect that might be something around identification and authentication and some other higher value things, but probably not the payment itself.
That's also what I said. We don't really. We believe in mobile. We believe in mobile payments, but not for the payments, but on value-added services like trust, e-identity, authorizations, things like that. I think at the moment the bank is for most of the customers the party they trust most.
Yeah, I mean, we've spent the last about 45, 46 years building, our global acceptance brand. So giving the consumer the comfort that wherever in the world they're traveling, they always have a way of paying with a MasterCard card. So for us, obviously, this is absolutely crucial. And what we're, of course, looking at as we transition to digital is that consumers still will want to have a recognizable brand wherever they shop. So that brand of the future is called MasterPass. So the challenge that we face is that, or maybe the opportunity, I should rather say, with as you go digital, and compared to the physical world where you have to visit a merchant and install a terminal, well, with digital, things will go much faster. So we launched MasterPass a few months ago. We went from 0 merchants accepting MasterPass to about 40,000 merchants today. In Europe, there are about 8,000 merchants already accepting MasterPass, and this happened just within, I would say, about 3 months' time. So as you go digital, that global acceptance brand is starting to spread in multiple countries. So we are taking it in 23 different countries already today, and consumers will still want to know that they can pay with their digital MasterPass wallet, whether it is on a website, online, or whether they go in a store, for example, they will see the Masterpass brand. So Masterpass, if you want, is our digital brand for the future. And it's all about interoperability and connecting millions of merchants and hundreds of millions of consumers together. And that's what we've been doing over the past 45 years, and that's what we will continue to do in the future.
Can I ask one quick question? I think there's a language problem. It may be a problem of translation, because my English is really very poor. But you said it was a very successful pilot in Leiden, but it stopped. I didn't quite understand. If it was successful, why did it stop? I didn't quite understand.
Some of the parts were just manually. So, for example, we didn't really do the download of the app over the air. So we didn't have a TSM organization and things like that. So we did the pilot to see what our customers found of paying with their mobile,
So
and
but
what kind of
really
customers.
liked it.
The customers really liked it.
So you stopped it. That's a Dutch.
Yeah,
thing?
that's.
I don't understand.
I'm sorry. I have to explain. Rabobank didn't stop, so our customers can go forward in Leiden. So they're still paying with it. But we have to take the outcome of the pilot into a real app, and I think we are going to launch just after holidays the real product in the whole of the Netherlands.
Maybe we just from a payment system point of view, our view is that bringing the payment into mobile phones certainly brings a lot of technical complexities. Go much beyond what you see with plastic, for example. When it comes to a mobile phone, it's more complex technology, and it's also about where do you actually store the payment card credentials. So on a mobile phone, you have two ways of storing the credentials, either on an embedded secure element, which is embedded into the mobile phone, or onto the SIM card, basically. But the SIM card is owned by the telephone operators. So there are technical complexities about this, there are business technicalities, also in some challenges that need to be met. So what we're also seeing at the same time is that now we have cloud-based solutions that are starting to hit the market. So you may have heard about the host card emulation on Google or Android operating system phones, which makes it possible now for the card credentials to be sitting in the cloud and being pushed to the phone in a tokenized form. So the fact that we now have more and more technical solutions available, we think will really drive mobile payments into the market as these technical complexities are being, I would say, arranged. Yep.
Can I make one more point about brand?
Yeah, definitely. But I wanted to make.
But there's a person has a more interesting question than me.
Yeah, because the technology, I think.
We don't want to talk about technology; it's boring.
Yeah. Go ahead. No, I just wanted to say that for payment brands like MasterCard, Ideal, or banks in particular, we have to solve those technical complexities and get it out of the equation for merchants and consumers. So I think we will solve that, and it's especially for this audience interesting to have your views on brands, etc. So, but you wanted to ask?
Sorry, please. Yeah.
Question?
No, I'm married. Was that the question? Was that the? I told you my English is not so. I'm not used to conferences with girls in it. I'm a technical guy. This is destabilizing.
Hey, I'm a chemist, so.
I'm from payments. This is uncomfortable for me.
No, I had a question. The session before we talked about that empowerment of customers really is good for your brand loyalty. Well, banks, financial institutions have a trust problem. How can you assure that the digital wallet solutions, I get a feeling that it's not technology pushed, but that I can choose whether my credentials are stored in the cloud or not, for example? What's the flexibility I will get?
I think I know what you mean, but I think you're slightly wrong to say banks have a trust problem. So it's true that people hate banks, but it's not true that they don't trust them. So I hate my bank. Of course, I'm a normal consumer and a taxpayer, by the way. So of course I hate banks, but I still trust them to look after my money, right?
Well,
partly
but
because
it's
of
tricky.
regulation and so on.
Like in the Netherlands, we had problems with, with credentials and using online tooling. Like, for example, DigiD was hacked. We had other issues with personal cards, like the chip for the public transport. So there are issues around security, and especially when it comes to financial transactions. It's a huge concern. I can imagine also with hacking, for example.
Yeah, but I don't care. If you hack my bank chip card, it's not my problem. It's the bank's problem. One of the reasons why I value my credit card so greatly, one of the reasons why I use my MasterCard all the time, is because it's because it's an Amazon MasterCard and I get cash back in Amazon vouchers. It's nothing to do with MasterCard's brand. But my point is, the whole reason I use those products is because it's not my problem. So yes, I hate the bank, but I trust them to fix these things. If Ukrainian hackers get it, there's nobody Ukrainian here, is there? I didn't mean to be offensive. But they quite often are Ukrainian, aren't they? So if Ukrainian hackers were to break into my bank account and steal all the money, I don't care. It's not my problem. It's Barclays' problem. And so you're right to say people don't like banks, but I'm not sure that translates into people won't use these bank products. I don't think that's true.
Okay, but you could be right, because I think you could be right. But then again, there are different technical options to secure my data, to get my credentials to use them. Will I get, as a customer, the option to choose this method or that method?
I think most customers wouldn't have the slightest interest in making those kind of choices. Most customers haven't the faintest idea what's going on. They wouldn't even understood it if you explained it to them. So I think hiding it from customers is a much better idea. If customers ask me how the credentials work in the cloud and whatever, I tell them that Pixies take care of it. It's easier than trying to explain to them TSMs and HCEs, and they believe you just as much. So I think we should hide this from customers, not give them choices.
Let's do one more, then we'll move on. Okay, thank you.
Question from the audience.
Yeah, hi. Just got one question, and it's we had a little experience here in the Netherlands a couple of months ago, where ING tried to actually use all the transaction data and make a business model of it, and to see how they could change their banking model into a transaction-based value model, which they could use and sell, a la Google. The interesting question behind that was that came in the press and was like a big thing, because everybody in the Netherlands was focusing on the privacy issues for the individual customers or the consumers. For me, the bigger question behind it was, who's actually owner of the transaction data? Is that the payment provider, or is that the bank, or actually is it the one who actually makes the transaction happen, the retailer? If you look at Google and Apple, they're for sure going to be saying that they are going to be the owners of the transaction data, and that as a payment provider, you're just servicing them in making that transaction happen. Isn't that the bigger question behind this? And the war on data for the next couple of years is going to be battled over there? Question.
Well, MasterCard already has a business selling transaction, and I understand it's a successful business. MasterCard already has a business selling transaction data. The difference is that it's not personally identifiable. So selling aggregate transaction data, so to help retailers plan, and that's absolutely fine. I don't know about the Netherlands situation, but my guess is the reason why people were upset is because it was personal data. Selling aggregate data is fine, and I'm sure there are lots of technical ways forward on that front. It's another reason why the retailers want their own apps rather than using other, and it's more than just the transaction data, of course, because if I'm using my McDonald's app or my Subway app or whatever, it's not just the payment data. They know where I am. They know where they know where I've been walking. They know which other stores I've been into. So for the retailers, the drive towards having their own apps is about keeping control over that data. So I think you're very right about that. But I agree with you. It's the retailer's data. If I go and buy something in a store, why is that my data, right? It's the retailer's data.
Rabobank also joined that discussion, so can you say something?
Yeah, I think really in the end it's really the customer data and the data that is passing through the store. Yes, possibly that's also the retailer's data, but in the end it is always the customer's data.
That's it.
Is there a lawyer in the room? Do we have? Is there an emergency on-call data protection lawyer that could step in? I don't know. If I buy something in your store, surely that's your data as well as my data.
Does it relate to your question? Is it about?
No.
Okay. Okay.
It's where I think that's normal. If you buy something in the store, then I give the data to the
retailer.
So
Yeah.
it's normal. Then he has the data. Yeah.
But probably that's the data that there is something bought in the store and not who bought that. But I think that's in the end that's the customer's data.
But there's much more valuable data. Like, so if I've got the app on my phone and you know that I walked into the store but I didn't buy something, that's just as important. That's valuable data for marketing as much as anything to do with the payment or the transaction. So all of this data is valuable to the retailers, I think.
Well, to thank all four of you. Trust that you'll be around at least through the break, so you can answer some one-on-one questions.